Today, let's take a look at auto insurance and leased vehicles and understanding the requirements. Leasing a vehicle can be an exciting venture, offering the allure of driving a new car without the long-term commitment of ownership. However, before you hit the open road in your leased dream machine, it's crucial to understand the insurance requirements that come with the territory. In this post, we'll take a deep dive into the world of auto insurance for leased vehicles, helping you navigate the twists and turns of coverage. First, let's understand the leasing landscape. Leasing a car is essentially a rental agreement for a set period, usually a few years. Unlike owning a car, you're not building equity during this time. Instead, you make monthly lease payments, and at the end of the lease term, you have the option to buy the car or lease a new one. It's like having the latest model without the long-term commitment. The shared responsibility with leasing companies. When you're behind the wheel of a leased vehicle, it's not just your joyride. It's the shared responsibility with the leasing company. They have a financial interest in the car, and to protect their investments, they have specified insurance requirements they want you to meet. Let's break down the key components. First, liability coverage. Liability coverage is the cornerstone of any auto insurance policy, and leasing companies won't let you hit the road without it. The coverage typically takes care of bodily injury and property damage that you may cause others in an accident. Leasing companies typically set a minimum amount of liability coverage you must carry, ensuring that you're financially responsible for any harm caused to others. Also, collision coverage. Picture this: you're cruising down the street and, heaven forbid, you find yourself in a fender bender. Collision coverage is your safety net in this scenario. It helps repair or replace your leased vehicle if it is damaged in a collision with another vehicle or object. Since a leasing company has a financial stake in the car, they often mandate collision coverage to ensure their asset is adequately protected. Now let's take a look at comprehensive coverage. Comprehensive coverage steps in to address non-collision incidents such as theft, vandalism, or damage from natural disasters. Leasing companies usually require comprehensive coverage to handle a range of potential risks that could affect the leased vehicle. It's like having a shield that protects your car from various unforeseen circumstances. Gap insurance. Gap insurance is a term you might not encounter every day, but it's a crucial consideration for leased vehicles. Imagine your leased car is declared a total loss due to an accident or theft. Gap insurance covers the gap between the car's actual cash value and the remaining amount that you owe on the lease. It's an extra layer of protection that leasing companies often recommend, ensuring that you're not left with a financial gap in the unfortunate event of a total loss. Deductibles are the out-of-pocket expenses that you're responsible for before insurance kicks in. Leasing companies might have specific requirements for deductibles, including setting a maximum allowable amount. It's important to check and ensure your policy aligns with their stipulations to avoid any surprises in case of a claim. Leasing agreements can be as unique as your fingerprints, and some leasing companies may have additional insurance requirements. This could include conditions about the term of length for your policy, naming the leasing company as a loss payee, or even inclusion of specific coverages like rental reimbursement or roadside assistance. It's not a one-size-fits-all scenario, so it's crucial to understand the specific rules of your leasing journey. Choosing the right coverage for your leased vehicle is vitally important. As you navigate the twists and turns of your lease term, choosing the right coverage for your leased vehicle is paramount. While leasing companies set minimum requirements, you have the freedom to tailor your policy to your needs. Consider factors like your driving habits, the value of the leased vehicle, and your budget when selecting coverage. It's about finding that sweet spot that provides adequate protection without breaking the bank. The end of your lease journey. As your lease term approaches its final stretch, it's time to think about the end game. If you decide to return the leased vehicle, the leasing company may have specific conditions regarding the vehicle's condition. Having comprehensive and collision coverage pays off here, addressing any wear and tear that might have occurred during your adventures. In conclusion, leasing a vehicle opens the door to an exciting driving experience, but understanding the insurance requirements ensures a smooth ride. It's not just about fulfilling obligations, it's about protecting your joyride and the investment of the leasing company. So, as you hit the road in your leased dream machine, read the road signs, choose the right coverage, and enjoy the adventure on the open road. Safe travels, my friends.